Twist Bioscience just dropped their Q1 2026 earnings, and if you're tracking the synthetic biology space, this call was packed with insights you can't afford to miss. From groundbreaking AI discovery revenue to aggressive market expansion strategies, this earnings report tells the story of a company firing on all cylinders. Whether you're an investor, a competitor, or just fascinated by the future of biotech, stick around because we're breaking down the top 10 takeaways, counting down to the number 1 most important revelation from this call. Starting at number 10, Twist announced the launch of their first e-commerce platform for NGS applications just last week. This might sound mundane, but it's actually a game changer. While their DNA synthesis business has been crushing it with e-commerce for years, generating a massive portion of revenue through that channel, NGS applications had exactly 0% e-commerce presence until now. This digital infrastructure investment represents what they call a transient investment using contractors, meaning they can scale it up or down as needed. The timing is perfect as it will complement their expanded sales team and open up an entirely new revenue channel. At number 9, their partnership strategy is crystal clear and incredibly deliberate. Emily Leproust emphasized that 2026 growth in NGS will come entirely from existing partners where deals are signed, pilots are complete, and validation is done. But here's the kicker. They're actively working to onboard new diagnostic partners specifically for sustained growth in 2027 and 2028. They even split responsibilities at the JP Morgan conference, with the CEO taking investor calls while their president and COO Patty Finn focused exclusively on customer calls. This dual-track approach shows they're playing the long game. Number 8 focuses on their margin management philosophy, and it's fascinating. They're maintaining their 52% gross margin guidance for the year while simultaneously making significant investments in the business. Here's the math that matters. They expect approximately 75 to 80% of all incremental revenue growth across product lines to drop straight to the gross margin line. CFO Adam Laponis put it perfectly when he said they'd rather build a multi-billion-dollar business at 50% plus gross margin than a $500 million business at 60% gross margin. That's the mindset of a company thinking exponentially, not incrementally. At number 7, we learned about their operating expense strategy. Twist is increasing OpEx by approximately $10 million per quarter without putting their EBITDA breakeven target at risk. These investments break down into 2 categories: structural investments, primarily in hiring sales and commercial people ahead of anticipated growth, and transient investments focused on improving digital infrastructure. The structural investments are permanent additions to support scaling, while transient investments can be dialed back once projects are complete. This disciplined approach to spending shows financial maturity. Number 6 revealed their current market position in NGS applications. Twist currently holds about 10% market share in a $3 billion serviceable market. The industry is expected to grow at a blended CAGR of approximately 14% across oncology, rare disease diagnostics, biopharma R&D, and academic markets. But here's what matters. Twist expects to significantly outpace industry growth levels by leveraging their new product introduction engine and commercial intensity. With only 10% share today, the runway for expansion is enormous. Coming in at number 5 is perhaps the most forward-looking metric, their AI-enabled therapeutic discovery revenue. Just a year ago, this market category was essentially non-existent. In fiscal 2025, Twist booked more than $25 million in orders specifically tied to AI discovery. This exemplifies their ability to help define new categories by listening closely to customers and adapting their roadmap ahead of market inflection points. As AI continues to transform drug discovery, Twist has established early leadership in providing the synthetic DNA tools these companies need. Number 4 highlights their explosive serviceable market expansion. In 2020, Twist's estimated serviceable market was approximately $2 billion. Today, that figure stands at roughly $7 billion, driven by their current portfolio of products and services. Looking ahead, they see a clear path to more than $12 billion of serviceable market by 2030, with additional growth opportunities as they launch new products. This nearly 6-fold expansion in addressable market in just 10 years demonstrates how their technology platform opens doors to new applications and customer workflows. The number 3 takeaway is their unwavering commitment to adjusted EBITDA breakeven in Q4 of fiscal 2026. Emily Leproust stated this is now a given, repeated multiple times throughout the call for emphasis. Every employee at Twist is measured and incentivized on 3 key metrics: revenue, gross margin, and adjusted EBITDA to break even. This commitment provides a clear finish line while they make growth investments. The confidence in hitting this target while simultaneously investing $10 million more per quarter in OpEx shows they've achieved the operational leverage they've been building toward. At number 2, their sustained revenue performance is remarkable. Over the last 3 years, Twist has delivered a 24% revenue CAGR while increasing gross margin by 20 percentage points on relatively flat operating expenses. This combination of growth, margin expansion, and operational efficiency materially outpaces growth across the broader life sciences industry. They've achieved this by transforming into what Emily called a new product introduction machine, consistently launching products that sit on top of the same core manufacturing infrastructure without adding risk or complexity. And the number one most important takeaway, Q1 2026 marked Twist's 12th consecutive quarter of revenue growth. This isn't luck or a favorable market tailwind. It's the result of a repeatable, scalable model built on innovative semiconductor-based DNA synthesis technology, operational rigor, and commercial execution. Their growth isn't driven by one product, customer, or market, but by a durable engine that scales efficiently. In an industry notorious for volatility, 12 straight quarters of growth backed by improving margins and a clear path to profitability tells you everything you need to know about execution quality. This is a company that's built a genuine competitive moat and knows exactly how to leverage it for sustained value creation. Drop your thoughts on Twist Bioscience in the comments below, and don't forget to subscribe for more earnings analysis from Earnings Central.